So without further ado, I would like to hand over the floor to Soon Yen, please.
Hi, thank you, Raymond. Thanks, everyone. It's my honor to share with you my experience for assisting company invest overseas, and in this case, Indonesia. So I will try my best to share a more practical way to share my experience on this. So I think in terms of construction companies, I think those speakers have shares about infrastructure. Yeah, I have seen and helped some companies has invested in like renewable energy. I think recently I have seen many renewable energy project investment opportunities, and I have also helping some of my clients in this area. So for construction related company, I mean, when we come to tax, normally there are two factors to consider. Depending on, I think firstly we'll look at what are the objective of the investment. Normally there are two. One is invest for long-term operation and then repatriate the profit back, let's say to Hong Kong. And another one will be invest and then for a short term that the company will exit the investment to realize the capital gains. For example, some of the solar power plant project that some company may invest short term and then they will exit the investment and sell to the operator to run the project. And also in terms of construction company, also another element that we need to consider is the performance of the whole construction work, the EPC arrangement, whereby let's say the master contractor has been granted this infrastructure project, and there could be like supply of certain prime machinery export from overseas into Indonesia, and then you have some engineering design performed overseas, and you have the onshore construction, and the construction may take 2 to 3 years. So there are different type of relevant business activity related to construction. So, I mean, as everyone knows, Indonesia actually has performed some tax reform and reduced its tax rate so that it's more friendly to investor. Previously, the corporate tax rate is 25%, and it has been reduced for 2020 and 2021 to 20%. And from 2022 onward, it will further reduce to 20%. So this referring to if I have an operation income of 100, I need to pay the tax of 20%. And I said if we are doing the investment for long term, and then thereafter I will expect that I will have repatriation of profit back from Indonesia. In such cases, the payment of dividend from the Indonesian company to Hong Kong, normally there will be a withholding tax on dividend payment. The standard rate is 20%, but Hong Kong and Indonesia has a very good treaty that could further reduce the withholding tax rate to 5%. So of course, if you are reinvest the profit into Indonesia again, then that profit could be exempt from the withholding tax. Okay. And another category that we are looking at when helping our client to do some planning, especially on tax structuring, how should they invest into Indonesia? So, and as I said earlier, another type of investment objective is with the short-term asset from the investment. So in that case, the company will normally look at what are the costs associated to future asset when I dispose my share in my investment. So if the Indonesian company is a public listed company, then you have a lower rate of 0.1% final tax for the asset. For normal company, let's say I have one company in Indonesia, a Hong Kong company dispose the share of Indonesian company. So the Indonesian tax regime also apply a simplified method using the deemed profit rate to tax this transaction. So effectively, the tax rate is 5% on the gross sales profit. Sorry, the gross sales proceed of the transaction. So these are the tax with respect to asset disposal of share. But of course, under the Hong Kong-Indonesia Treaty, they also provide a preferential tax treatment to this situation, provided it is not a land-rich company. Let's say a manufacturing company, which is major asset is not land. Then under the Hong Kong-Indonesia Treaty, the taxing right is granted to Hong Kong. Therefore, we could get exemption of this 5% tax in Indonesia. So in Hong Kong, if this is a long-term investment and if this is for offshore, then probably this asset will not be taxable in Hong Kong as well. So therefore, the use of Hong Kong as a holding company provide a very good planning opportunity. Your asset could be under the treaty 0% effective tax rate. So that is something very attractive. Another thing for investment into Indonesia, we need to watch out is there is an indirect transfer regulation in Indonesia. Similar to China and India, we also have this type of regulation whereby the company try to avoid directly transfer the shares of Indonesian company. They use an intermediate. For example, a company using a Cayman or BVI company, and then that Cayman BVI invest in Indonesia. And in this case, let's say the investor then sell the shares of the Cayman company. So you are not selling the Indonesia company shares, but you are selling the Cayman. But because the Cayman is 100% owned by Indonesia, basically you are indirectly transfer the share of Indonesia. So in that case, under the Indonesia tax rule, so they were able to look through this transaction and deem it as if you are transferring the share of the Indonesia company, and the 5% tax, as I mentioned, will still apply. So this is something to watch out in the case where we use those so-called conduit company or special purpose companies in tax haven jurisdiction. In terms of doing business in Indonesia, I think one of the key elements to watch out is there are withholding tax obligation when making payment. And this withholding tax obligation actually apply when you are making payment to between Indonesian company, or also when you're making payment to overseas non-resident company. So for example, if you are making interest payment to another or royalty to another company in Indonesia, or you pay technical and management fee to another Indonesian company, then there's a 2% or 15% as per the table on the withholding tax rate that the payer is obligated to withhold and pay the tax to the tax authority. Let's say, for example, you are paying a technical or management service fee. When you pay 100, you need to remit $2. So you only paid the 98 to the recipient, and $2 you will then have to pay to the tax office. And this $2 actually is the advance tax payment of the recipient, which they can claim tax credit when you make its payment. And another important aspect that relevant to the construction industry is, if you can see, there is a construction contracting service and also construction planning and supervision services, which have a range of 2% to 4% rate and also 4 to 6% rate. I will go through that further on this specifically to construction industry. Another one is when making payment to overseas non-resident company, for example, when you pay dividend, as I said earlier, when you pay interest or royalty to a foreign company, then there's a withholding tax apply. The standard rate is 20%. The same could be further reduced under the treaty. So this table just abstraction and comparison. I mean, in terms of dividend, royalty, and interest, which you can see under the standard rate, the withholding tax rate is 20%, and Hong Kong actually has a better rate, which you can see for dividend, it is reduced to 5%, whereas under the mainland China treaty, it is 10%. And the same for royalty, the Hong Kong treaty also provide a reduced rate of 5% as compared to China. So that's also explained why most of the Chinese companies they will go through Hong Kong to invest. But of course, the current international tax environment, the tax authority also challenged the anti-treaty shopping. So in order to enjoy the treaty benefit, the company should have sufficient substance like office, personnel, operation in Hong Kong, so that you can get a certificate of residence issued by Hong Kong Tax Authority, and you need this for enjoying a treaty benefit under the Indonesia-Hong Kong Treaty. And as I said earlier, if let's say we are performing a EPC contract, let's say it will last for 1 year, 2 years, or 3 years, in tax there's another concept of permanent establishment, which is not a legal form concept, which means in tax you have the responsibility to pay tax, notwithstanding you do not have any registration in Indonesia. So the most relevant one I highlighted is something like if we are doing EPC either as a master contractor or subcontractor, then as long as my construction or building site in Indonesia lasts more than 183 days, then the company will have the obligation to pay tax. So the tax rate that I mentioned just now will apply. But of course, for construction company, it applies a withholding tax rate, which I will walk through in the next slide. This is the special regime that applies to construction companies. It is the final tax regime, which means when the project owner making payment to the construction company, depending on the qualification of the respective construction companies, the rate will apply. And let's say, for example, if I am the construction performance services without any business qualification, then the project owner will need to withhold 4% out of the 100. Let's say he's paying 100, he needs to withhold 4% and 96 payment to the subcontractor, and the 4% will need to pay tax. And this will be the final tax, and the contractor will no longer need to do a computation of his profit and loss and then compute his corporate income tax based on the 20% tax rate. So this 4% apply on the gross payment amount. And the industry, I mean, in terms of the industry issue is there are double taxation issue in this area. For example, when the master contractor issue to the project owner, let's say 100, then there will be 4% withhold by this. But let's say the master contractor have a subcontract. Let's say I further subcontract 50 to my another subcontractor. Then the subcontractor, when they make the payment of 50, there will be another 4% to be withhold. So there will be double in this area. So therefore, I will advise is they should have proper planning on how to mitigate this, so that the tax cost could be reduced. One common practice is by way of joint operation. So therefore, the master contractor will form a consortium or form a joint operation with the key subcontractor together and have the contract arrangement with the project owner. So therefore, they will be tried to, with this method, they will avoid or mitigate the double tax issue in this area. So this is the prime area that we have seen most of the time. I think VAT is something common, and we don't see major issue because normally when you have incurred VAT, then you can be claimed as input tax, and then when you charge your customer, then you will charge as an output VAT, and the input and output you can add it off. So normally the impact on VAT is more on the cash flow. It should not create a cost to the company. So I think this would not be a big issue. So I won't spend more time on here. Another area when the company doing business in Indonesia for existing or new investment, I think it's the area of investment incentive that the company should consider. So there are various types of incentive to be chosen. The first one is more like a general incentive, like the company qualifying for this, then they can claim accelerated depreciation, and then the tax loss carry forward normally is 5 years for normal company. For this case, they can extend for 10 years. And the reduced withholding tax rate on dividend payment from standard 20% to 10%. And they also will be granted investment allowance of 30% for capital expenditure, which was spread over a period of 6 years, so 5% each year. So this is the first type of tax allowance, is more on the basic one. The second incentive that will be more attractive is a tax holiday, which offer to investment in pioneer industry. So you need to fall within the pioneer industry. I mean, in short form, it's more like a promoted industry. So if you fall in this pioneer industry, then you will be granted the so-called tax holiday for corporate income tax, depending on your investment value. For example, you can see that there are 5 years incentive period that you can enjoy 50% reduction rate and 25% for additional 2 years if your investment value fall under 100 to 500 billion IDR. Or if you want to enjoy more attractive one, then your incentive investment value will need to be higher. So this is another type of tax holiday which is more attractive. Another one will be investment in the special economic zone, KEK, where the company would also enjoy various type of tax and non-tax incentive for the activities allowed promoted by the government. So in this KEK incentive, you will able to enjoy tax holiday, tax allowance, and certain exemption on import duty or VAT refund as a package for it. But for KEK, they will have a better incentive in terms of the tax holiday, which if you compare with the table that I showed previously, you will notice that the tax holiday for KEK actually has a lesser condition. The investment value is less. So these are the different type of incentive that the company would need to be considered when they are considering doing business in Indonesia. So maybe I just keep this in terms of time, keep my presentation short, and we can keep others for Q&A. Thanks. Chairman.
Okay, thank you very much, Soon Yen, for the again very succinct but very helpful, useful information.